हम स्टार्ट करें.
Yeah. Good afternoon, all the participants and panelists for the today's very first seminar of capital market for the new council. Before starting our seminar, I want to play our institute motto. So I request all participants to put their right hand on their heart and request Ms. Raji to play motto song. Ms. Raji, please.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
Thank you, Ms. Radhi. And today's our seminar is on capital market. So it's a before recent topic, ups and downs in capital market, because we all are seeing that because of many regions, there are so many up down during the day, during the month, during the week also. So we thought that it should be a proper topic for today's discussion. And but before that, we have our dynamic chairman, C. Murtuza Kachwala sir, with us. So I request sir to say some word of wisdom for us, sir, please.
Thank you, madam. Good afternoon, and to all the participants. Let me first welcome and thank CA Dr. Ashok Ajmera ji. Sir, thank you very much for accepting our invitation and joining us here to spare your valuable time and share your knowledge with all the participants, sir. I also want to thank CA Pinky Kedia, my colleague in council. She is the chairman for Capital Markets Committee. An excellent program Pinky has organized with such a good faculty today. So they say, like, if the beginning is good, the job is half done. But let me assure you that Pinky's job is just started. And I have told her that in capital market, we also want to do a refresher series, which will be at 12 to 15 hours somewhere in the month of May. We also want to do every month program, 1 month on derivatives, maybe on hedging, maybe on PMS, maybe on equity, date, whatever, different topics, and we'll get the best of speakers. So you'll see a lot of action during this year under her leadership as chairman of capital markets. I also want to thank both the coordinators today, CA Hemant Gandhi and CA Rishabh Chaudhary. And I once again welcome all of you friends here. At WIRC this year, the theme which we have crafted for ourselves is leap towards excellence, achievement and development. And we are saying development of chartered accountant, the profession as well as the country overall. And when we talk about development, ultimately one of the things is how do we get different areas of business or practice or work? How do we try and increase our revenue or profits? How do we maximize our wealth? And how do we help the whole community or the whole nation in maximizing wealth? So we kept 5 goals at WIRC this year. And one of the goals is to bring more and more opportunities to chartered accountants of areas where they can indulge into or they can practice. So we are saying we'll also do a refresher course on valuation. We'll do something on maybe internal audit. We'll do something on insolvency and bankruptcy. And like we are here today, we'll do something on capital markets. and there are so many of them. So there are so many areas of practice like a startup, MSME, listing. So we'll come up with various programs of longer duration, not a 2 hours, 3 hours, but a 12 to 15 hours, where like we will try to give you hands-on of the subject, even the case studies, and some live chartered accountant who are practicing in that area of practice coming and giving examples of like where the empanelment can be done, what type of work can be done, what type of assignment they've delivered for the clients, and how have they made revenue, and how do you bill and how much do you bill. So those are type of things which we're wanting to cover. The second thing which we want to do is like with the increasing technological changes, how do we ensure that our members start adopting technology? And on technology front, we have designed and started two courses on IT, part 1 and part 2. In part 1, 60 hours practical training on data analytics using Python and SQL, and it is on Friday evening 6 to 8, Saturday evening 6 to 8, and Sunday morning 10 to 1, where we are sitting at our home with our own PC or laptop. A lot of data is given to us and we learn the coding language. And once we code using an SQL query and using a Python, then like we can implement this not only in our practices, but we can also implement in our client premises. Similarly, the second thing, I'm sure today Ashok sir is also going to show us various graphs and charts in terms of 50 to 52 weeks, high, low, which type of industry goes where, what happens, etc. Everyone loves to see beautiful graphs and charts. And the part 2 is about the whole visualization which we are training using Tableau and Power BI. That is a 40 hours training course. This training, friends, are coming at a very, very reasonable price. The part 1 is 9,000, part 2 is 5,000. We are designing one more part 3, which will be teaching us or making us hands-on on automation and digitalization using tools like robotic process automation. So how do you automate bank reconciliation? How do you automate claim processing? How do you automate payroll processing? Not only for your organization, but also for your clients. So overall, we are saying if we can adopt technology, that will be nice. In addition to this, on the technology side, I'll take only few 30 seconds more. We are also trying to create some utilities or tools which can be made available free of cost to chartered accountants, like interest calculation or calculation of like NRI status. So how many days a person has spent in the country and how many days he spent outside India, and like how many more days he needs to spend outside India so that he maintains his NRI status or something like that. So there are 12 of them which we are trying to create, which will be available free of cost. We are also trying to talk to various software vendors and identify softwares which can be used by chartered accountant generally. And if we can enter into an agreement or MOU and make this software available at a very, very concessional rate to our members. So these are few things, but there is a whole host of activities which we are designed to meet our 5 goals, which we identify at WIRC. So not taking much time, but I'm sure today, see, a lot of us now also invest our own money in capital market. We try and do intraday. We also take long positions, and many of our clients also and friends also ask us कि कौन से share में डालना चाहिए, क्या करना चाहिए. I'm sure today we are in safe hands, and Ashok ji is going to cover all the myths, all the doubts, and he's going to give us really very good tips and very good answers to what we should see and what we should not see. So with that, happy learning to everyone, and over to Pinky Madam again. Pinky Madam, over to you. Thank you.
Thank you, Chairman Sir, to keeping faith and confidence in me and making me Chairman of the Capital Market Committee. And I assure you that we will keep one seminar in a month. And we are planning for refresher course also, as we discussed earlier. So that's our planning for all the participants. We want to convey them. So, but right now I don't want to waste more time of participant, and we will come on the topic. So can I request Rishabh to formally introduce today's learned speaker, CA Dr. Ashok Ajmera.
Thank you, Pinky ji. Good afternoon, all the members. It gives me immense pleasure to introduce CA Dr. Ashok Ajmera ji. A chartered accountant by qualification, Mr. Ashok Ajmera is the founder of Advanced Global Services Private Limited, a 35-year-old company engaged in the entire gamut of financial services, which includes capital markets, depository services, merchant banking, investment banking, and corporate advisory services. He was awarded with the Honorable Doctorate in Financial Management by KIU, South Korea. As a capital market expert, Dr. Ajmera has given more than 2,500 TV interviews on capital markets and economy on almost every business and news channel over the last 20 years. He's a prolific speaker and having addressed more than 500 seminars and webinars on various subjects. Presently, he is the chairman and managing director of Advanced Global Services Limited, board of management member of Great Bank, the board member of Association of Certified Financial Crime Specialists India chapter, and working committee member of BSE SME Exchange, and is actively associated with many professional, social, and cultural organizations. With this, I welcome CA Dr. Ashok Ajmera ji and would like you to take over the session. Thank you.
I just want to inform the participant that Ashok ji want to take a question answer session after every chapter, or they can say after every slides, or what, how you will take Ashok ji, please convey that.
Yeah, so thank you, Rishabh, for giving such a nice introduction of mine. And of course, Mr. Murtaja, CA Murtaja and Pinky, for giving me this opportunity to addressing my own chartered accountant colleagues, my friends. You know, chartered accountant, the word itself, you know, when I became chartered in sometime in 1977, it used to do like a magic wand, you know. The moment you say I am a chartered accountant, people used to stand up. And from that time only, I have got great respect for this fraternity of chartered accountant, my own colleagues, brothers, sisters. So you are all very elite member of the society, you know. Once you have done the chartered accountancy, consider yourself among those top few, I don't know how many percentage of the population, but a very small percentage of the total population is an elite people. So your grasping is good because of your qualification, your training. And this is such a course, you know, where you get on the job training. So I will try to elaborate some of the points, but I guess that you will grasp the other which I have not spoken. So with that, let's start. So what we will do, we will run through many slides. And after every such topic, you know, we will open the floor for questions, but floor in the sense that here you have to put into the chat box your questions. And I think Rishabh or Pinky, whoever is moderating the questions, will ask me the questions when we declare that we open for questions now. And then maybe 3, 4, 5 minutes of that round, depending on the number of questions comes. And then again, we go ahead with the further topic or discussion. Is that clear? I think I have to take the answer as clear. So
Yes, it's clear.
Let's move to the Akash. Let's move to the capital market. So, you know, before the ups and downs of the capital market, let us understand what is this capital market. Who are the players in the capital market? What is the size of the capital market? So many of you must be knowing about it. I'll run through a little fast on these things. So, you know, a company comes in the capital, and today one more disclosure or other rider, that when we talk about capital market, we are talking only in the terms of equity market today. In our entire discussion, we are concentrating only on equity and not on debt market. Is that clear? So a company can come for listing on the stock exchanges, which in India today we have 2 primary stock exchanges, NSE and BSE, through the primary market route. What is primary market route? Is to get yourself listed by offering fresh shares in the company for raising money for the company, or you can come through offer for sale. The offer for sale is comparatively a new trend, because in those companies where private equity players, they come in at the initial stage, The promoters also have put in a huge investment into the company. When they want to get themselves listed, some of these investors want to get out of it because they have invested for a long time and they have their own aims and objective of holding for a particular period of time. So you can list your company for raising funds for the company, or for through the offer for sale, where the money goes to the promoters or the investors, or hybrid. Part of it can be for the company and part of it can be offer for sale. So this is how the primary market built up. Without primary, there is no secondary. So once a company gets listed, it is now then trading starts. It's known as the secondary market. We have two exchanges, as I told you, NSE, BSE, and the trading starts. Now let's look at Indian capital market overview. You know, the barometer is BSE, Sensex, and NSE 50. The top 50 shares listed on the NSE and the top 30 shares on BSE. That is, and their indices keeps changing depending on the criteria which they have put for a stock to be included in that particular index. So BSE index started in 1979 with a value of 100. And by the time the NSE Nifty started in 1995, it had already gained the value up to 3,405. So in order to have the uniformity, let us compare with now 1995, NSE started with 1,000 and BSE was that time 3,405. And what is the index today? Sensex 57,292 and NSE Nifty 17,000. So in 26 years, from 1,000 to 17,000, and from 3,400 to 57,000. In fact, it recently crossed even 60,000 also, but because of this war, the indices have come down. So, and what is the average daily turnover? Again, in the market, there are various segments. So for the simple equity investor, there is a cash market. For those hedgers or speculators and traders, there is a cash market, as well as there is a derivative market. In derivative also, there are two products, mainly options and future. So let us look at daily turnover of Bombay Stock Exchange, which was in 1998, was 896 crore average daily turnover, was increased to 5,387 crore in 2022. But on NSE, it was from 1,520 crore to 58,442. And if you look at the derivative turnover, 2,67,184 crore daily average turnover of BSE. But look at NSE. What is the daily turnover there? 772.09991 crore. 72 crore, 7,0991 crore. So look at the enormity of this amount. And the market capitalization of all these scripts listed on BSE is 260 lakh crore. And in NSE, 306 lakh crores. So we have a huge capital market. Now, how do you get listed on the stock exchange? I will just take a few points only. We will not go on listing process because it's a whole session in itself. So once a company decides about the requirement of the fund, you know, either for putting up a project, further project, or a new project, or for the expansion of the project, or for the repayment of the loan, or for working capital, or a combination of everything, they take their proposal to their board. And one board in principle approves. Then there is a process of appointing the merchant bankers and other intermediaries for your issue. Legal due diligence is taken place based on the draft prospectus or red herring prospectus prepared. If it is a main board exchange, then it is prepared for SEBI. If it is a SME exchange, then it is prepared and submitted to only those stock exchanges, either emerge on NSE or BSE SME exchange. They verify your documents. They verify mainly the disclosures, because they are mainly concerned with the disclosure, that you should disclose every possible thing to the prospective investors. And there are risk factors. There are external risk factors, internal risk factors. There are litigations, business scenario, industry scenario, past financials of the company. So all these things are, they wait and they see that there is a proper disclosure. Then they give the approval for listing on the stock exchange. Before that, after you get the SEBI or stock exchange approval, you have to file your prospectus, which is a final document for the issue, with the registrar of companies and get their acknowledgement card. After that, you decide the date of the issue, and you already decide when you file with the ROC, and then start conducting your road shows. Book building mein you fix the price, fixed price IPO, which is already fixed before only when you file with the ROC, or otherwise there is a book built issue, and then there is a issue gets opened, completed, closed, and then allotment takes place, and the land stock exchanges gives you the permission for listing and trading, and then the stock gets started traded in the stock exchange. In case of SME, there are some other eligibility criteria. Now let us come to the ups and downs of capital market. So what are these ups and downs? I'll give you some time to read this chart. Whether the chart is clear to you? Okay, then I will tell you various happenings in the market. And those happenings, those incidences only does the major upside and downside in the market. They do contribute in the major fall or upward of the market. So in 1990, the Sensex crossed 1000, but then there was Rajiv Gandhi's assassination and it fell. Then Dr. Manmohan Singh came. He announced very liberal, opening up of the economy, and the index went up. And then came Harshad Mehta scam. The market went down. Then came the Mumbai blast in the BSE building. It also affected the market again. Thereafter comes Kargil war, Atal Bihari Vajpayee coming as a PM, and then the technology boom, the Sensex crosses 5,000. But then when by the time, it was taking momentum, so many scams came up. Ketan Parikh scam, Gujarat earthquake, Indian parliament attack, and USA attacked by the terrorists. Again, when market went down, then NDA falls, and Manmohan Singh comes as a PM in 2004. And then Sensex crosses 10,000 due to the commodity boom. Whole global economy, there was a boom, and the Sensex crosses 20,000. Then the UPA wins second term, but in between Satyam scam. Biggest was in 2008, the global financial crisis when Lehman Brothers fell. That has affected the entire market very, very badly. But in India, because of our policies that time, we were insulated for a few years. And then Commonwealth and telecoms scams. And then comes the big thing, Mr. Narendra Modi coming in as the PM. And then thereafter, but then again, the things have happened. There is a ILFS, PNB scam. Before that, implementation of GST. Before that, I think in 2016, November or so, demonetization, which took the market down. GST took the market down. And then this came. ILFS was the biggest because it affected a lot the entire NBFC space. The entire market was affected because of that. And then finally, came COVID. And in COVID also, there are 2-3 cycles. And in between, the booster given by the government, the reduction in the tax rates, and various incentives which are announced by the government and the Reserve Bank of India, so market kept on moving up and down. We can go to the next. In this slide, no, just a minute, Akash. Same slide. Now you see, friends, what I want to tell all of you is that all these things have happened. But you see this graph, this chart. It has never remained down for a longer period of time. The Sensex always had an upward journey. Even in time of the Satyam scam also, it came down very heavily down. But see, either a V-shaped recovery or a U-shaped recovery, every time. COVID was one of the recent, in your recent memory, was one of the worst period, on that 20th March and 25th March 2020. I would consider there is a golden opportunity for the investors to come in and buy. But then we will discuss later that why it so happens. Okay, so now we can go individually. I already narrated you, but we can see in detail. In 1991, Prime Minister Rajiv Gandhi's assassination. The market, it was the darkest period in the history. The market went down. 1991, Manmohan Singh coming in from 1488 to index going to 1916, almost about 20%. Then again, 92, Harshad Mehta bulls came. The market came down from 4,467 of Sensex to 2,595, 43% crash. And then in 93, Mumbai blast, again market came down, but it ranged between 2,300 to 2,400. Then Kargil war affected the foreign investments, which resulted again in the fall in the market. Next. 99-2000 .com bull run. Market was also high, all silver line and DSQs and whatnot. I mean, those stocks. But then came 2001, Ketan Parikh scam, Gujarat earthquake, and the market fell from 5,000 to 3,262.33. 2004, fall of NDA government. Sensex declined nearly by 16% post the result, but rebounds and ended the year at 6,602. 2006, boom in the commodity prices, crossed 10,000. And in 1 year, I think only in 11 months, that time, the market doubled 10,000 to 20,000 because of the increased liquidity from the global players. And then came the global recession, the fall of Lehman, followed by Mumbai terror, and then from 21,000 to 9,000. It was the steepest fall since 1992. And then came Satyam. Market was still struggling to recover the financial crisis, and came the Satyam. Then UPA wins second term. The Sensex saw its biggest intraday gain. And friends, the overall market, it halted due to the price band, price circuit. We have been hearing every day some stocks hitting the circuits. 5%, 10%, 20%, which markets, stock exchanges, they set up from the risk aversion point of view, and people not losing the money or not gaining too much just on some flimsy or just small 1 or 2 information. They want the market to digest the fact so that, thereafter they can trade sensibly. But on this day, the market-wise circuit was there. Whole market got closed. And Commonwealth and 2G scam, again Sensex fell by 5%. NDA wins election, market cheers Shri Narendra Modi as the Prime Minister, and Sensex touched 25,000 following the NDA government winning the Lok Sabha election. Then came demonetization suddenly, and market fell by 4.57% month on month. Otherwise, it fell more. but on month, because little bit it was recovered. Then GST was implemented. Sensex fell by 10% to 34,000. PNB and ILFS crisis. These are again biggest crisis in the financial market in India in the NBFC space. And then NDA wins second term. Sensex touched 40,000. COVID brought it to 25,630. I think in my recent memory, friends, it was the golden period for the people to put in the money in the market. The Sensex lost about 40% and came market cheers, growth oriented budget. FY21 budget again crossed 50,000. January 22, Sensex touches 61,000. And then came the Russia-Ukraine war, and now we are at around 56,500 or whatever it is. So look at I will tell you in terms of next percentage, and I'll tell you why this slide is important. Because market fell by 40.8% in the global recession, 86 to 88, but within 3 years returned 200%. So 40% plus 199%. Again, at the time of Gulf War, India fiscal crisis, 1991, a time had come when we had to even pledge our gold. Market fell by 39.3%. And within 3 years rebounded by 320% plus. Ashok Ajmera came, market fell by 56.4%, but rebounded 90.2%. Similarly, 97 market meltdown, fall was 40.5%, but return was 11.7%, means 40% recouped plus 11%. .com bubble fell by 57%, return 110%. It means it is 167% from the fall. Similarly, high inflation, financial crisis, European sovereign debt crisis, subprime crisis, 11%, 11.6% fall, but the rebound is 80.8%. And COVID-19, market fell by 36.5%. Post return in 2 years, 229% from the lows. So this shows that one must understand the ups and downs in the market, why these markets go down and why they again come back. And when you are sure, looking at the history of last 30 years or 40 years, that they come back very fast, then why do you sell in panic? Let's look at the next slide. No, this is about the global markets. So we will not take the global market also behaved accordingly. So here, friends, this is very important. Why do we do that? We knew COVID has come, market is closed. First announcement was for, I think, 21 days, 3 days, 7 days, and then 21 days. But everybody went on selling in panic, as if tomorrow is never going to come. Market is not going to open. Forgetting that in the past, also several such things, though COVID has come once in 100 years, but similar kind of the incidences which disturbs the market have taken place in the past also. But we don't change. Why? Because of this psychological behavior of investing in the equity. We invest in the equity in the hope of getting a decent profit, better than any other asset class, because there is a risk also involved here. And this is my statement, which I am making, that no other asset class in the world can give a better return than the equity, world over, and especially in the Indian context. But what happens whenever we do any such investment, we set some targets, 15% return, 20% return, or maybe 15% in 6 months or 3 months or 9 months. This market always gives you the opportunity to make money. But once you reach the target, that goal which you had set up, you start talking to so many other people, even those, I mean, it so happened sometime few years back, 1 or 2 decades back in the Bombay Stock Exchange, even that Panwala used to say, you should buy or you should sell. So that is the time when the greed starts overpowering you. That no, now I have made 20%, but I think I can make another 20%. And that is the time when a smart investor, he sells his stock, but you don't sell. Because you are not fearful of others getting greedy. Now what happens? There is a time, every stock has a time. It just cannot go on increasing every day. There are various happenings, even the company's performances, quarter to quarter result may change, economy may change, government policy may change, the weather, the climate, everything changes and the stock starts coming down. Now this is where the fear starts. But greed is still there. No problem. I think I had made 20% more. I may settle at 10%. But even that 10% also goes. Then you feel, oh, my own principal is also now going. The amount which I had invested is also going now. So the fear grips you. And finally, a day comes when you get out of that stock, you sell that stock, not only in profit, but in loss. See what is written below. Be fearful when others are greedy. And be greedy when others are fearful. And Akash, who said it? None other than the investment guru, Warren Buffett. Okay, friends. So till now, any question? Any question have come? Anybody has put any question on the chat? Can we take some questions? If anybody wants any question. Okay, I think the people are either okay. So either I'm so clear to them that they don't want any further this thing, or they are really sleeping. Okay, so we move ahead. Let me, at least for me, take a sip of water.
One question is there.
Yeah.
How risky is timing the market?
Yeah, so that is the reason that you don't time the market. We will come to it little later. That once you have done your proper exercise of investing in a stock, you should not worry for these timings, because neither you can never get a top, nor you can never get a bottom. And you should not worry also about that. Next. So we will go now on Akash, next slide. Some of the quotes, what these investment gurus have said. It's a learning for us, for all of us. Never lose money, Pinky ji. And rule number 2 is never forget rule number 1.
Correct.
So if you have invested in a properly verified, researched, informed stock, why you should lose money? And whenever I am talking on all these principles and rules, my dear friends, mind it well, I am a fundamental analyst. I am not covering too much of day traders or speculators or gamblers. But we will talk about that also. But my general statement or general submissions, whenever it is there, it is based on the fundamentals. What is rule number 2? What is the other saying? Price is what you pay and value is what you get. So if you pay 50 rupees a dozen for banana, you will get banana. But if you pay 600 rupees a dozen for apple, you will get apple. So don't connect both the things. I paid only 50 and I got fruits. You have paid something and you got value for that thing. Some people, they say, stock is running at 5 rupees. There are n number of, I would call among the small cities and towns, small investors, I would term them in almost about 15 to 20% investors are such. They do not invest in any stock more than 50 rupees. Without understanding that what they are paying, are they getting the proper value for that or not? Third one is only buy something that you would be perfectly happy, even if the markets close down for 10 years. And if you are not thinking about that, then you should not invest for even 10 minutes in that stock. Now, this is a saying by the Warren Buffett. He is a very legendary investor. We may reduce this term from 10 years to say 5 years or 3 years. But long term, because nowadays the definition of this long term, short term, mid term have changed. Short term used to be 3 months, 6 months, which has become now 3 days, 5 days, 1 week. So don't buy a stock. If you feel that if I don't look at the price of the stock and if the market closes, it worries me. If you find a value in the stock, if you find a perpetuity in the stock, the sustainability in the company, its product, its activities for a longer period of time, then only you invest in that stock. Otherwise, do not. And again, another very good by Charlie Munger. The big money is not in the buying or selling. Now, this is for day traders, my dear friends, and many of you or your client or your friends and relatives may be day traders only, because as we have seen, the major turnover is from that. So, what they make? You ask any one of them. Either are 5 crore ka turnover kiya, but I made only some 5,000 rupees or 3,000 rupees or 1,000. Another day you ask him that today I did 10 crore, but I lost 7,000 or 10,000 or 50,000 or 1 lakh rupees. So it will go on debit, credit. At the end of the day, I think hardly any money is made or lost. I'm losing more, rather, losing more. So big money is never made by buying, selling the stocks on a continuous basis. But big money is made by waiting. A 500 rupees MRF tire share can become 85,000 rupees. Though today it came down because of this ongoing war and some other regions recently, about 66,000 or so. If you would have bought, a motorcycle of Eicher Motor, Royal Enfield in 2003 for 50,000 rupees, 52,000 rupees. Or if you would have invested instead of that 52,000 in Eicher motor, the motorcycle has become zero, but the 52,000 rupees stock would have become 6.5 crore rupees. So the big money is not in the buying or selling, but in waiting. And investing is not about beating others' game. It's about controlling yourself in your own game. You know, everybody keeps looking at other. Among the chartered accountants also, among friends also, among relatives also, among businesses also, among community club, society member, they keep looking at others. Oh, he made so much. So-and-so operator, so-and-so family office, so-and-so person has just left the job and now today is 2,000 crore rupees person. This way you are not going to reach anywhere. You have to concentrate and control your own game. You plan your game, you play your game, and you analyze. Just do not keep comparing all the time. Somebody has asked a question that we come to know about big money only after it is made. Yes, you are right. But my dear friend, if you've seen the cycles of 5 years, 7 years, if you break last, say, even if you say after SEBI came in 93, 94, till now, you break in 5 years, 6 years, 4 cycles, 5 cycles. And look at those stocks. I think we can go later on that, Akash. We will go later. We will cover everything today. Come back to our original sequence. So it's not that today also if you put whatever that 2,300 in Eicher motor, and if you check the fundamentals of the company, you check the Royal Enfield, you check their big commercial vehicles which they are making, and if you discount the present crisis of the diesel price and this thing and whatever the Ukraine-Russia war, and if you feel that the share is available at a good price, you meet me after 5 years. Similar story in Asian Paint, Pidilite, MRF, even Reliance, you see, it's a household name. Invest now, you will make good money. I mean, I'm not that way individually talking about any stock. I'm just giving it an example. So in order to overcome all these problems of ups and downs, and they are disturbing you, or you are selling in panic, buying in euphoria, to avoid all these things, a good investor, your client, my dear CA friends, or your relatives, or your own investment, of course, to advise the client, you will be needing some SEBI registration as an analyst or as an analyst entity. Like we are the SEBI registered research entity, as an entity, as a company. But I think informally, whenever you check their account, their investment portfolios, this knowledge will be very handy to you. Many of you must have already gone through, because many of my videos are there on the YouTube also. Others videos are also there. But we will discuss each point little bit more in detail today, because we still have, I think, about 1 hour, 10 minutes more. Pinky ji, am I right? Okay.
Yes.
So let us now look at the fundamental analysis. This is very, very important. The technical, when we talk about the technical charts and other things, they are for day traders, temporary investment. But when we are talking about the ups and downs and how to cope with these ups and downs, I think we have to totally, fully rely on fundamental. So let's look what we look in fundamental. So let's start with the overall economy. the domestic economy, the global economy. Now, if we are living today in India, we are investing in the Indian stocks, what our economy is saying, what the parameter, what the ratios, what the growth. So there was a time, I think in the first phase of the UPA, we grew almost about average of 10% per annum on the GDP. Then in second terms, we little bit faltered. Then again, we came back to 7.5%, 8%, but because of certain factors, certain happenings, our Honorable Prime Minister, in fact, 2 years back, it announced that we should be a $5 trillion economy by 2025. But that time, nobody had envisaged COVID-like situation, which is really once in a 100-year type of a scenario. So we went down, went in minus. But there was a sharp uptrend. And now we say that we are going to grow at the 8.5%. Somebody are guessing 9%. Somebody's estimates are coming at 9.5% in 22-23. So if that rate of GDP growth, if you are going to have, what can stop the Indian companies, Indian corporates to grow? Because through their growth in this GDP is built up. Either the service, manufacturing, mining, agri. So economic, if we are confident about our economy growing well, if our certain businesses, certain companies which are concerned with the global economy also, or even Indian economy also gets affected by the global happenings like hardening of the interest rate by Fed in USA, might invite the flight of money back to US from India. So those things are also affecting us. So we should first analyze the global economy and domestic. After that, of course, I covered this already, that the GDP. And what do we see in our economy, which is run through the monetary policy, fiscal policy, inflation, and social stability and accountability. So monetary policy, Reserve Bank of India fixes the bank rate, the repo rate, reverse repo rate, taxation, revenue expenditure in the fiscal policy, economic growth targets, inflation targets, and social stability, social accountability, spending on the social reforms. So inflation and economic growth, these two are the important criteria. If you do not control inflation, your purchasing power capacity comes down. Things become expensive. And your growth gets neutralized to that extent. But in a growing economy, a reasonable level of inflation is also required. We cannot go like deflation like Japan. So we have to assess that. It's a very broader macro terms I am talking about. Okay, next. Then comes in the fundamental analysis, the industry analysis. Underlying forces which are influencing and governing this industry, the standing of the industry in the overall economy, the critical factors that determine the company's position relative to the other companies producing similar products or services in the same industry. Now you see many of the industries, the whole industry gets wiped out. Like you see this camera, Orvo, and in India, in Bombay, we used to have so many, and everybody used to run, and the flourishing industry. But what happened after this cell phones and camera, good high resolution cameras coming in the cell phones. Nobody asks for those camera now. Very few people, only the people who have got, interest in photography. That whole industry is wiped out. Similarly, now this digital wave, it has affected many of the industries or the way those industries used to work. That industry is standing also into the overall economy. Say automobile industry. So automobile industry as a whole in the overall economy, or the infrastructure, cement, steel, infra companies, or the service providers, banking and financial services, IT services, what is their position into the overall GDP, overall economy? If that is good, we can remain invested in that industry. Next. So in industry analysis, how do we calculate B2B, B2C or services? All these terminologies started a few decades back only. Otherwise, only industry is an industry, that is manufacturing, then mining, agri and service industry. But now all this B2B, B2C, so you have to check that also in your fundamental analysis. Yeah, next. Then comes the company analysis. Any question so far? Anybody has given any question in the chat box? No. Okay.
One question was
Yeah.
that was, please also discuss the effect of the US printing money and also US interest rate scenario.
Yeah, that is in the global economy. If you see it, see, every country has to handle their own economy. Now, US believes in the deficit financing and printing the money because US over the period has developed its own reputation of keeping the monies of the outsiders and keeping it intact and safe. There is no incidence ever that US failed in paying its bond or servicing its bond or the amount which is kept in the US. China used to keep huge amount of investment in US, slowly lifting. We keep huge amount of investment in US, our own Indian government money, RBI's money, because they have built up over the period that reputation. So they don't bother that we are just printing notes without backed up or underlying security like in the olden days. I mean, in our early days when we were studying, we were told that only as much as notes can be printed as the underlying securities like gold is there or bonds are there. But it's no more, neither in India also now. So yes, it's a different subject in itself to understand and assess US economy. What we are today talking is how that happenings affect us as an investor in India. Am I clear? Okay. So then thereafter comes company analysis. And in the company analysis, it's a very, very important analysis. Look at the management and the promoter. Most important is the management and the promoters. Now, in India, we are accustomed of understanding promoters as the family-driven companies, and they have their own reputation, and accordingly, we attach the reputation, the background, the experience and credentials on those family names, like Tatas, Birlas, Kumar Mangalam Birla, Adit Birla Group, and of course now Ambani's. But over the period, with the development of the professionalism, lot of professional companies have been developed. And lot of overseas funds and companies there have set up also their shop in India, which are run by total professional management, like Hindustan. So over the period of time, they have developed their credentials as the professionally managed company, Infosys. Promoters have reduced their holding greatly and they got separated also. But the company is working totally as a professional managed company. So you have to see promoter's background and not 1 day or 1 month, 1 year or 5 years or 10 years. Right from the day that promoter is there in the market. A new promoter may come in, but he takes that risk of our judging to 25 on a scale of 100 if he's new. No problem. We can judge him also. But how much mark you will give to a proven management or a management who has just come in, new company? So accordingly, on this score, on this particular point, the score will be less. Now, because all the new companies are coming, new promoters come, it has to come. A small scale become mid cap become large cap. Recently, what happened to one of the biggest startup company who came with a public issue? Anyway, so that's on the management and promoter. Then comes the financials. There is a separate video of myself how to read the balance sheet and how to read the there are so many fundamentals and all, but we will talk little bit in brief today. You have to do the ratio analysis, growth pattern, past performance and projections given by the company, their capital structure, profitability, fund management, how did they manage their cash, that you can check from the cash flow statement which is given by every company. Work out the ratios and then compare those ratios with the other companies in the same segment or the standard ratio for a standard kind of a segment which is given by the experts. Look at the growth pattern. Not necessarily the company should grow always at 25% CAGR or 30% CAGR. But whether there is a consistency in the growth, it has not become stagnant. Even if it is growing at 10% or 7% or 9% per year, no problem. But it should not remain stagnant or go down. If that is there, then something is wrong, because either the product mix should have been changed, the activity should have been changed, or the promoters or the company people should have thought of exploring new markets. Past performance is very clear to judge. You are all chartered accountants. And nowadays, thanks to the government and various policies and prudent measures which are taken even by the institute and others, the audit standards have increased enormously now. The chances of people coming out with five different type of balance sheet for different banks and institutions and income tax and filing has gone. Those days are over. So you can definitely, to a great extent, rely on the audited, published financial performance. All those, PR audits and this and that, so many strengthening has been done in this space. Plus, as a chartered accountant, even if you are not a forensic auditor, you have that ability, that keenness to find out that something is wrong just by looking at the figures. Because if the company is making a turnover of 1,000 crore and the debtors are 800 crore and the stock is 400 crore, you will see that why it is happening so. 8 months sales realization is pending. 6 months stocks are kept. So then you will look at other comparable peer companies and other companies, what happens there? And you will find there is a tremendous difference. It means something is wrong in this company. Either they inflated sales, or they sold but received the money but not accounted for. Like that, there are several figures which can send you alarm bells, and you can check the performance, capital structure and profitability. Capital structure is also very, very important. And along with the capital comes the, debt, the fund management, leveraging, over leverage, under leverage. A company which is working only with their own net owned fund, capital and free reserves, that also is not considered that kind of a company which is reasonably growing with the debt, but growing faster than this company. So some amount of debt is not bad. It means that promoter is innovative. They are putting money, increasing business, expanding. So it's not always that if a company is 100% debt free, it has to be better than the other company. I'm taking a little more time on this because this is very, very important. Then the strategy and planning, past records and goals, financial planning of the company, process, tools and approaches which are adopted by the company, the corporate actions, mergers, acquisitions. Then comes the important, intellectual properties, trademarks, patents, supply demand analysis of that company, unique USP of the company, the product and technology, industry analysis. We already discussed market share, substitute, and then do the SWOT of this company, the strength, weakness, opportunities and threats. After that, if you put, you have to give 100 points, say, suppose if you are giving, say, 25 points to the first one, 25 to the second one, and giving whatever remaining 17 to all these three, and then individually also you break down. Then if you come beyond 60 plus or 70 plus, then you can say, okay, I can definitely invest in this company. Next, Akash. Now ratios which we discussed, key ratios, ROE, return on equity, return on total capital employed, EBITDA margin. Now EBITDA margin is something which can be different from industry to industry. Manufacturing to service, manufacturing to agri, service to mining. But then all those peer comparisons are available. So if a reasonably decent company manufacturing certain industrial product, the EBITDA say is anything from 14, 15 to 20%. Similarly, you compare the other companies in that segment. If it is 1 or 2% here and there, and so many other things also, you will check and then give the marks. But if it is drastically low, like 5% when other is making 13%, or say 30% when others are making 18%, then the alarm bells, and accordingly you have to check what is wrong in this company. Debt equity ratio is very, very important. Lower the debt equity, the most comfort it gives you, the better it is, because the company can service it. But zero debt, as I explained to you earlier, may not be necessarily good if you compare with another company with a lower debt but doing better. As long as your cash flow is properly managed, cash flow is permitting you to take that debt, I don't think there is any harm. Standard is, again, it changes, high gestation period industry, high capex industry, infra, roads, bridges. The debt ratio can differ from company to company, segment to segment, industry to industry. But as I said, there are comparative figures available and you have to draw your own line. Working capital cycle, I just explained to you some time back that, huge debtors, huge creditors, stock, huge amount of loans and advances. Every company as a chartered accountant, the first thing you should check in the balance sheet is the loans and advances given. All adjustment measure goes into loans and advances given. Either it is a related party transaction or some capital advances which never, that capex, that equipment never comes, or some kind of other arrangements where no return comes. Because if advance is, say, 10 crore, from those advances, whether the company is getting 1 crore, 1.5 crore rupees return, if not, what is the purpose of that advance? It is given to some sister concern. It is given to some subsidiary company. Okay. In that case, there is a business strategy, some business benefit to this company. This is to be analyzed. Checklist to avoid getting trapped in gruesome companies. Very important. Too many corporate actions. 10 rupees share split it to 1. And what is the share price? Only 100 rupees. What it shows? That he wants to make the share price at 10 so that many more investors they come in, valuable investors. I can understand if the share price is 2000 and somebody is splitting at 2 rupees or 5 rupees. MRF is 66,000. So these are all the points, the pointers rather. Large overseas acquisition about which nobody knows in India. Huge money has gone into those companies and money laundering takes place. So you have to check it. You have to go a little more into deep. High debt and rising debt level, continuous raising of debt and very high debt. So one day it has to stop. So you have to analyze why this debt was taken and whether it has given the company something plus than the servicing cost. If my debt, which in earlier years used to be 12, 13, 14% per annum, now of course it has come down to 8, 9%. If that because of that debt, I'm making money to 12%, 13% or 14%, means 5% or 7% or 10% more than then also it is justified. But otherwise, why? Pledge promoter holding. Now it is mandatory for every company. So you should look at their shareholding pattern and see. Now there are two purposes for the pledge. One is that there is some standard condition in case of some of the bank loans for your working capital or for your term loan, that they put a condition that so many percentage of the promoter shares will be required to be pledged. Now this kind of pledge is not harmful because no money has been raised by pledging these shares. Money has been raised for the regular functioning of the company. But in order to secure, the banks are asking sometime the promoter's percentage of some equity to be done as a pledge. But pledging by the promoters for raising funds and also those kind of funds which are not again coming back in the company, but acquiring some other assets, some personal assets or spending on personal, definitely raises alarm bells. Then management giving aggressive guidance and not achieving. Nowadays, there is a practice of giving the guidance. The smallest company will give the highest guide. I will become 10x. I will become 20x. And this fashion is started because of the startups. Because they start only with 10x. So you have to see the past record. That in the past, how much guidance they have given and whether they have met those guidance. A company like Infosys will be very, very careful in giving guidance. And it can be hardly variation of 5% plus minus or 2% plus minus. Because they are concerned about it. They have checked everything thoroughly before giving that guidance. Unless some unforeseen circumstances, unforeseen thing happens. High related party transaction, I have already explained, either by way of investment or by way of loans and advances. Promoters gradually reducing their stake. This is also very alarming. If they are reducing their stake and using the money for other businesses and for other purposes, then it is not right. Promoter skin should be there thickly into that company. Yes. Now, technical analysis, I am just explaining what is the technical analysis. I am not a technical analyst myself, though in my office there are many, because we have to meet the demands of all kind of investors. We are the member of stock exchange, capital market, we are the research house, we are merchant banker, investment banker. So we have to have all these things. But what is the technical analysis says is identifying the trading opportunity by analyzing the statistical trends gathered from the trading activity, such as the price movement and volume. So the past happening in that stock. I used to share a platform, in many TV interviews. I have given almost about more than 2,500 TV interviews. And many a time along with me, there used to be a technical analyst also. Many a times. So one day I just asked my friend, technical analyst, that you referred one company just now, that if it goes beyond 40, it will go to 60. But if it goes below 25, it will go to 10. So what actually this company does? What is the business of this company? He says that I have never checked. I checked only the price movement, the pattern, the charts. So this is what happens with due respect to the technical analysts. But their theory also may be right, because ultimately what they are advising you, that since you are a trader, a short-term investor, this can be the behavior of the stock in future based on the previous pattern. So they are basically not concerned with what the company is doing, because in 1 or 2 days or 5 days or 10 days, nothing is fundamentally going to happen to that company. So why should they bother about what this company is doing? It is the study of the price movement in the market, whereby traders use a historic chart patterns and indicators to predict future trends in the market. I already stated this. And technical analysis involves the interpretation of the patterns and charts. That is what is their skill. Like they check the moving averages, parabolic stop and reverse, parabolic SAR, moving average, convergence, divergence, MACD, stochastic oscillators, relative strength index, Bollinger Bands, check-in oscillators. So these are the various, since I am not covering the technical analysis, there is no point in my talking about it, because I am not expert on this. Now, let us come back to capital market on the whole, and especially in India. And why do I say that investing in the equity is the best asset class, best option, provided you follow the fundamental analysis about which we have discussed. You are vigilant. You are aware about what is happening in the economy, what is happening in the industry, what is happening in that segment. There is nothing, no other, even gold can beat equity, the returns which are given by equities. So let us talk about wealth creation through capital market, India's growth story. What happens when per capita income crosses $2000? It's a new theory. Russia crossed 2000 per capita income in 2001, and the consumption grew by 3.2 times in next 5 years GDP. China crossed in 2006, and the consumption grew 2.6 times in next 5 years. China saw 1.5 times growth in bath and shower category. After it cost $2000 per capita. So India is now crossed 2000 per capita. So whether cosmetic and skin growth will be 25 times in India also? Yes, it can. Otherwise, why Nykaa would have been listed for more than 1 lakh crore valuation? And standing strong even today also when Paytm crashed. Because if you see 25 times growth in cosmetic and skincare category, 25 times, not 25%, then what can happen to this particular industry? Because we already crossed now $2,000 per capita. So what would be our consumption? Humongous. We are living in the historic moment, my dear friends. India's corporate total, corporate profit is $71 billion, and market cap of NSE, just now we discussed, $3.42 trillion. First time in many, many years, in last 2-3 years only, we have crossed market cap to 1.3 times of the GDP. Apple's profit. Now see, we are just see where we are and where can we go. Alone one company profit is $55 billion US. How much? That is almost about 75% of the entire corporate profit in India. So one Apple and where you will be. Near to our GDP is Apple's market cap, whole country's GDP. It is equal to 180 plus countries' GDP. Astonishing figures. Yes. Now, generational value migration in wealth creation. Why? See, unorganized to organized. After the GST came in, almost everything has become organized. Weak, small, very small, tiny business model to strong business model. Less competitive. We never used to even like to write Made in India. A few years back in 1990 or 91, 92, 95, I used to go abroad and our people used to export through some other countries so that the origin of the product comes to that country and not India. But today, everything made in India. I mean, anywhere you go, you will find something made in India.
Rajendra Somani is giving his opinion that I feel that per capita consumption is low in most of the sectors. The growth of Indian stock is going to skyrocket in future with good governance and strong leadership, with Make in India and all getting diverted to India.
It's a good observation. Then second is migration is digitization. We have gone digital and very fast. See, State Bank of India's YONO, mind-blowing performance. How much business they do through that platform. Everyone is going digital, adopting new technology, thereby scaling their business beyond the normal estimation which they had made few years back. Disruption, change in the consumer mindset, change in the distribution network, change in the cost of distribution, cost of manufacturing, and disrupting themselves. Now you look at, say, e-cycle. There is one guy, he has got about 240 e-scooters. And Zomato has signed him for 25 PAN number in India. 45 PAN number. They give us per PAN that you can operate in this PAN area. PIN code, not PAN. I am accustomed of pen, pin code. So electric vehicle is not for only personal consumption. Now, how much distribution network, for distribution we require all kind of vehicle. I'm talking about electric because it's a new thing, new gen. And I have inspected many of these factories of e-cycle, e-bike without registration of RTO, with registration of RTO, e-delivery van, e-rickshaws. Total change in the distribution network. Cost. Yeah. Structural changes which will take Indian economy to the next level. Jan Dhan, Aadhaar, mobile. More than the population, you have the mobile connections. Look at Jan Dhan. 10 years, 15 years back, any normal villager could have thought of opening a bank account. Crores, I don't know, 20, 25 crore Jan Dhan accounts. Thrust on digital economy, UPI, health records. Even the student, young children, they go and they buy something and they just say, okay, scan that your UPI and this thing. Nobody carries cash. I don't carry. One day I went somewhere and he said, sir, we don't have machine or anything and I don't have my own Google and this thing, but I didn't carry the cash. So I told, sir, sorry, I don't carry even more than 2,000 rupees in my pocket now. But you use my credit card. Swachh Bharat. Phenomenal. How many rural household toilets have been built? Huge. Ujjwala, Nal se Jal, every Nal will have Jal. Direct benefit transfers everywhere, easy transfers. 3 years back, when I was myself a Rotary Rotary president of my club, I made 100 rural household toilets in Igatpuri. And people were so happy. An absolutely clean village. You will not find a small dirt or dust or even any garbage or anything. PM Awas Yojana. We built 500 houses under PM Awas Yojana in Wada, where government gives a great subsidy. We Rotarians added some more money into it and built up the houses. Look at their, the kind of houses, the shanties in which they were staying. And now today, the standard of living is increased. Their hope in the life has increased. GST, IBC, RERA. Now you see the builder, you can anytime check the RERA and you find out what is happening in your building in which you have booked your flat. Privatization, asset monetization, PSU divestment. India has demonstrated its capability by the COVID vaccination program, except a few glitches, in the second wave when we faltered because we didn't have that kind of infrastructure. But look at the otherwise overall management of the COVID vaccination program and treatment. Phenomenal. India is among the countries having lowest tax structure. We have gone down as low as 15%. And for startups, any 3 consecutive years out of 10 years, I think earlier it was 7 years. So we are really ready for a big leap. Look at the wealth created by some of the companies. Pinky ji, we have another 20-25 minutes now.
Yes.
Yeah.
Yes, sir.
So, when the our market cap was $1 trillion in May 2007, Reliance was 59 billion. TCS was also in that list. Infosys was also in that list. When we became $2 trillion capital market, market capitalization in July 2017, Reliance was still there with 75 billion. TCS again was there at 72, and SBI came in, and Infosys, which was already there in the first, also came in the second at 34. Then we reached in May 21, $3 trillion market. Reliance shot up from 75 trillion to 174 just in 4 years, my dear friends. So how much? Almost about 2.3 times in 4 years. TCS from 72 to 156. Infosys again 34 to 79, more than double. So Reliance, TCS, Infosys continued. SBI joined in the second 2 trillion type market, the top 10 continued. And now in February 2022, when we are 3.68 trillion, just before the Russian, I think Russia-Ukraine war, look at 209. I mean, the kind of growth, wealth created by these companies. TCS $174 billion market cap, Infosys 96 and SBI 57. So from this, friends, somebody had asked that question, we know only thing then when we make the money. But today also, in May 2007 also, the people who are knowing, they minted money like anything by investing in Reliance, TCS, Infosys, SBI, even HDFC Bank is giving good returns, all of them. So similarly, you can make prediction for future also. And how the market value the management. As I talked about in fundamental, trust, culture, scalability, delegation, professional management. Delegation means professionalism, focus, integrity, passion. There is one very large corporate group whose vision is that any market in which we enter, our minimum market share should be 10%. Minimum. Otherwise, we will not enter in that market. So, these are the things which market values this and give the reward accordingly.
So there is one question regarding to fundamental analysis. They are saying that while doing the fundamental analysis of any company, should not we also consider the FII or FPI holding in that company?
Yeah, because I have not gone into very much in detail, but I have covered the shareholding pattern, in that fundamental. So it is the elaboration of that, the capital structure, the shareholding pattern, and secondly, it's a debatable, it's not necessary. Even our own FII, even our own FI, our own mutual fund comes in. Like a mutual fund like HDFC or SBI. If they come in any company, you can be sure at least 25% mark additional you can give it to that company about the corporate governance of that company, about the financial health of that company. So yes, you are very right that this long-term institution, the institution who invest for a long term, if they enter, if they come as a shareholder in that company, definitely it adds a lot of value, weightage to it. Now, factors beyond numbers. No number can talk about Titan. Titan is Titan. Whether the gold goes to any price or it comes down to any price, there will be some blip. But it is a household name, HDFC Bank. Years and years, continuous performance, growth, no major hiccups, no scams, no, Bajaj Finserv. What price today? It started with Hamara Bajaj, and then Bajaj Finserv was separated as a finance company of the Bajaj group. But the kind of goodwill, credibility they enjoy. Look at Asian Paint. Many paint companies have gone and come and gone. Many are still there. But nobody is near to Asian Paint. Now the crude is hovering beyond $100 a barrel, 110, 120. That is why there was some blip into the Asian Paint. And I advise people that every fall, because these things are temporary in nature. Your oil cannot remain all the time at beyond $120 or $130. And the company is not going to perform badly just because of 15 days or 1 month or 2 months of the lower profit. It's Asian Paint. It has grown and will grow forever. Pidilite. I mean, it has become synonymous to furniture. Fevicol. There is no other option than Fevicol. Many such glues and this thing have come up, but nobody succeeded. So what can happen to Pidilite? Tata, TCS. So these are the things which are made. I mean, the markets value these managements at any price. That is why their price to earning ratios are very high, because people are giving price for the growth, for the consistency, for the brand. Yes, next. Now we will look at.
So one question is there, that what do you say that in the current price post COVID-19 pandemic, it was strongly supported by domestic DII when FII were taking out money?
Yes, it's absolutely right. There was a time when there was only one mutual fund in India, that was UTI. And there was only one insurance company, which was LIC. And they could never, take on to this FIIs. Uncle Sam. But today, we have a very, very strong domestic mutual fund industry, insurance companies who invest for a reasonably good period of time. And our funds are, but ultimately all these funds are flowing from those individuals, from those trusts, those small corporates to these mutual funds, and they are putting that fund in the market. So even when COVID also, the flight of money was not there as much. Rather, money was coming. And that money they were putting into the market. So today when the FII, there was a time when FII used to sell, whole market used to crash heavily. But today, when they sell, we have our institution to buy. And when they buy, we have our institution insurance companies to sell. And that is why it is not affecting as much. Otherwise, this kind of huge amount of investment which they are taking out, they have taken out in last year and now also this year, would have taken the market down by 50%. So you are right that our institution, our local mutual fund industry has become very, very strong today. What Einstein said, compound interest is the 8th wonder of the world. He who understands it earns it. He doesn't pays for it. And it's absolutely true, my dear friend. Try and understand and realize the power of compounding. You are sleeping, but your investment is making money. You are resting and the machines are working. The minds are working if you put in a service company. It's a 24 hours, 365 days compounding which is going on, which you yourself cannot do it. You invest in the fixed deposit of 4.5% to 5%. That is compounding only to the extent of 5% month on month, but that is also a compounding which gives you a benefit. But if you keep the money in the locker, how would you beat inflation? Forget about earning returns. And to take the maximum advantage of the theory of compounding, equity investment is one of the best investments. Look at Page Industries. It has rewarded its shareholders handsomely in last 13 years. Now look at these numbers. A market cap of 369 crores in 2009. Just 12, 13 years back has reached to 45,994 crores, my dear friend, on March 4, 2022. 2 zeros, and that also will be less. An investment worth 1 lakh rupees in 2009 in page industry would have made how much? 1.29 crores. A CAGR of 45% over the years in last 13 years. This is the magic. This is the power of equity investment. Next. Story of Bajaj Finserv. We were talking about Bajaj. 1 lakh in 2009 is now 1.1 crore. CAGR of 44%. Story of Bajaj Finance. 1 lakh in 2009 is 14.55 crore. No, sorry, I think there is something wrong in that 1.45. Eicher Motor. Eicher Motor has created good wealth for the investor. An investment worth rupees 1 lakh in 2009. I was talking about that 2003 earlier when I gave the example, but if you look at 2009 investment of 1 lakh rupees in Eicher Motor, it is worth 1.12 crore at a CAGR of 43.75%. MRF, I gave the example of it. If somebody would have invested 1 lakh rupees in 2009, it would have become 42 lakh rupees, 33.54. And somebody would have invested 500 rupees in, I think, 1985, it would have become 65,000 rupees. Ajanta Pharma, a very strong pharma company. Look at rewards they would give. 1 lakh rupees invested in 2009 is now 2.53 crore. Among the pharma industry, one of the best CAGR performance of 53.05%. And today also the share is available at 1900 rupees something. When the war started, it went down to 1725. Came back within 5 days. Dr. Reddy's Lab, 1 lakh in 2009 would have given 9.86 lakhs at 19.29%. Another best performing pharma company. Next. Now, wealth creation through capital market. Since there are many young chartered accountants here, and many of you have the clients which are also comparatively small. They are small private limited companies having turnover of anything from 20 crore to 200 crore. Generally smaller in that portion, making some profit of maybe 1.5, 2 crore to 5 crore, 10 crore. And they have already exhausted all their resources as a capital from promoter, friends, relatives. And they have also taken the loan from the bank, which is generally maximum available is 1.5 times of your net worth of your credit capital. Now their business is good, they want to expand. So they need for the capital investment as well as they need for the working capital also. But they don't have any resource now because bankers are saying that we cannot, as per our norms, we cannot pay you more than this. So friend, here is another very good avenue which we opened 10 years back. I am the first committee member of the SME exchange of BSE. We sat with BSE, we sat with SEBI. We worked out very, very easier rules for this company because as a merchant banker in 95 to 97, I brought the issues of about 17 companies in the same size of 2.5 to 3 crore. Now it has become say 5 crore to 50 crore. It is coming in the SME exchange. Generally the issue size. There can be a different full talk on the SME, but in 10 years, 364 companies on the BSE SME exchange, they raised only 3,800 crore, but their market cap today is 48,000 crores. Average investment period is only 4 years. So in 4 years from 3,844 to 48,000 crore, you can understand where are we heading. We have 6.5 crore small enterprises in this country. 6.5, 7 crores. Some people are saying, the other day I met the president of that association of SME, 8.5 crore. And now as per SME definition, even small traders, service industry, everything has been covered under the SME definition. So identify those companies. Yes. And work accordingly. Now, there's another class which has come up in this country very recently. And you also can have some of those ideas, some of those clients who have got these ideas, who already built up some reasonably good sized business of new gen business, we call it. Look at Zomato. You know, loss making company. Net worth 16,494 crore. That is also because of the issue, that premium which they have commanded. They raised, and market cap of 63,565. And this is also actually because of after that fall into all these new startup companies. Then you Nykaa, I just referred, Nykaa had gone beyond 1 lakh crore market cap. Paytm today 34,000, but it had also gone beyond 1 lakh crore after listing. Policy Bazaar and Bank Bazaar 32,000 crore. Fino payment, small payment bank. It was, I think, around 4,000 crore market cap. It is now available at 2,338. And Zara is a profit-making company. Reasonable market cap 5,746, 5,746. Net worth is only 10 times of around 8 times of the net worth. One can start looking at these companies. I don't say that, you know, there was an euphoria. Any new things comes up, there is a euphoria built up around that. Maybe the promoters, maybe some of the foreign investors, mainly the foreign investors only, because major money has been put up by them. Luckily, the small investors have not put in that large money into these companies. Maybe merchant bankers. But nobody was clear, you know, about the valuation. In our research report, I think we ignored all these companies because we said we are not competent to value these companies. We don't have that kind of infrastructure. Yes. And look what the capital market has made. How these people are called as the richest people in India? Can anybody tell me? Not by their building, that Antalya, not by their cars, their property, their yacht, their planes, their factories, their offices, their agriculture land, but by holding the equity shares of those companies which they got listed on the stock exchanges, that this value has been arrived. Mukesh Ambani, $96.5 billion. Gautam Adani, just 10 years story, 74.8, in fact 7-8 years story. After 2014, 74.8 billion. Shiv Nadir, consistent, 31 billion. Our Radhakrishnan Damani, D-Mart, 29.4 billion. And Cyrus Poonawalla, vaccine fellow, 19 billion. This all made because of the capital market. And we can say today our market is robust market. Next.
One question is there. Do you think these newly listed loss-making fintechs are worth investing?
It is definitely worth it. As far as the answer is concerned, it is definitely worth spending. We are saying that it is not worth. People say that it is not worth because we don't understand this business. It's new to us. We don't understand this value game. It is new to us. So even with the expert advice also, if you don't understand, then don't invest. But if they are in a position to convince you that what is Paytm, how much other than the banking circle market of the transfer of money, Paytm is having the market share, your eyes will be opened up. When you see Nykaa, you know, even a lady in the village sitting in a 2,000 population, 3,000 population village, and when somebody goes out in the town, what she says, you know, bring that particular product of Nykaa. So where are we heading? We have 135 crore of population. Maybe, I think, I don't have exact statistics, but how many ladies out of that? Maybe 65 crores. And this starts from the age of 7-8 years, goes as long as you live. So I think it's a time to look at these companies, keep your eyes open, look at the business, try to understand the business. I don't say that every startup company, everybody who's coming with this high valuation are worth investing, but definitely they are not worth totally ignoring also. Okay. Now last is
one question is also there. That
I think I have got only five minutes left, so 5-6 minutes, so I will complete.
One small question is there. Past trends are not reflective of future. Can you give few tips for future? Past trends
Okay,
are not reflective of future.
I'll give you after I finish this last slide with a rider. I will give it to you. Yeah. So, and some of and your question will be to some extent answered here also. Do's and don'ts of capital markets. Be an investor, not a trader or speculator. Somebody has made 500 today, somebody has made 5,000 today, somebody has made no. It's absolutely no. What you have to see is that if I am investing 1 lakh rupees, in a normal course, I would have got how much? 5,000 in bank deposit, 8,000 in some bonds, 11-12,000 in some risky companies bonds, some 6-7% yield in the property rent. So if I expect 15% in the capital market, is it bad? So calculate accordingly. So if you set a target that in 1 year of this investment of 1 lakh rupees, I will make 15,000 minimum, and if I make more, I'm more happy. But sometime I may lose also on some scrape. So I am keeping my target to 20% and not 15%. And work in that direction. But what actually people are doing, that 1 lakh they are giving as a margin to the broker, trading for 10 lakh rupees beyond the capacity. And when this type of things happens, they lose their shirt. All money and shirt. Trading does not allow an investment portfolio the opportunity to compound over the years. Trading is for a day, 2 days, 3 days, 5 days. How it will compound? So the eighth wonder, the magic of eighth wonder, you are losing out. Chase quality companies having excellence. Money will follow sooner or later. Don't worry. Invest in Asian Paint. Don't worry. Invest in Pidilite. Sit down. Invest in HDFC Bank, SBI, some of those top insurance companies, SBI Life, some of those housing finance top companies. You know, see some of those tire companies, some of those automobile companies, Eicher Motor, Maruti. When the war started, Maruti came down to up to I think 6,002 in COVID. Of course, it went down very low, but about I think 7,200 something. Again, it went to 7,800. Now it is so opportunity. But even if it falls 3-4%, 5%, don't worry. If you are invested in an excellent company, money will follow. Definitely. Successful investors have created wealth through investment in the quality names, holding it for many years and not through trading and future options. So it is my strong message not to get too much into the F&O. F&O originally created for hedging. Suppose you have a 10 lakh rupees worth of stock of Reliance, and there is a wedding or there is a party in the house and you want this 10 lakhs immediately, but you don't want to lose the stock. So sell in the cash market today. Tomorrow, day after, you will get the 10 lakh rupees, but buy in future today itself by paying the 2 lakh rupees margin or 2.5 lakh rupees margin, but keep the stock with you. And then again, when you make the money, again reverse the deal. This is hedging. Even to some extent, predicting the future and investing in future, especially options, where you just buy the option, don't sell the option. If you want to go long, buy option, call option. If you want to go short, buy put option, so that there your risk is only up to the premium paid and not writing the contract where the risk is unlimited. Easy money through trading never lasts, because two friends, they meet every day. One day that friend asks, you are trading? Yes, I made 50,000 rupees. Next day he says, I made 10,000 rupees. Third day he says, yeah, I lost today 1,20,000 rupees. So what is the guarantee of that? And why do you do that? Focus on fundamentals. We already discussed promoter, quality, management, integrity, business model, products and services, market share, financials, ROC, ROE, operating, all these things, we already discussed. Then comes the margin of safety is crucial for making investment. Don't be obsessed to buy quality companies at peak exorbitant valuation. Wait for the right opportunity to enter. There are opportunities. When others are selling, you become a buyer. When others are buying, you become a seller. When others are greedy, you show a fear, sell the stock. When others have fear, you become greedy, buy this stock. Worst time provide opportunities for making big return. We have seen the whole chart of 40 years. Every worst time has given the opportunity. And it never lasted more than 3 days, 1 week, 3 months, maximum 6 months. Be humble and learn from your own mistakes. Don't boast around. Don't say I'm an expert. Don't say I'm a guru which will help you making 1 lakh rupees per day, 10 lakh rupees per day. These are all humbug, false claims. Be humble. God has given you the knowledge. God has made you chartered accountants. One of the very big qualification. Be humble to the market. Accept your own mistakes, and you will be more wiser. With this, friend, I'm very thankful to all of you, though I cannot see you in this particular program model, but I think you must have seen me continuously, or some might have slept also. I don't know whether you liked it or not, my presentation, but since it was a good time of 1 hour and 50 minutes, I tried to explain to the maximum possible extent. My numbers and details are all there with the Pinky ji, and half of the time I'm doing as a social, as a service to our friend, fellow chartered accountant, industrialist, businessman. Though of course, I have to run my office also. I'm a professional. Thank you very much. And still we can take some questions if they are there. So I have given some names while talking on the last slide.
Thank you, sir. Thank you, Ashokji. Actually, you can see in chat box, all are appreciating your presentation and your way of talking. So
I have never seen the chat box. I will see it now. Yeah. Okay.
Yeah, all are very appreciating your presentation. So, and one question is in the question answer session, that how to know when crises are ended.
You don't have to know. As I told you, you can't always get onto the bottom. Crisis has happened that you knew. Because of the crisis, the market has reacted that you know. But how much more it will react? Leave it on your wisdom. I have started investing from last week heavily for my clients. Again, after that fall. And I think in last 3-4 days, we are making about 7% profit overall in the portfolio. So it's your own judgment. I cannot say that particular stock Paytm, today it reverted, I think 12-13% up. It was hammered down like anything. But even if you would have bought at 1,200 rupees or again 800 rupees or 600 rupees, no problem. If you check you felt it's a good stock, it is here to stay, stay calm. Neither not too much of averaging also. If you don't have the means, don't borrow and put the money again. Not to get too much of panic also to sell it at 500 rupees. So every time is the right time, either for sale or buy. But which one to buy and which one to sell? Of course, you are all chartered accountants and you have got so many friends. I mean, ours is a very big fraternity. And you know, this kind of comments coming from the chartered accountants really makes me more humble. I really value the views of chartered accountants, and especially the new chartered accountants of 10-15 years, because I am a very old school chartered accountant and they are much wiser than me, much more knowledgeable in technology, much more knowledgeable in new areas of audit, taxation, evaluation, valuation. So thank you very much.
Sir, one thing I want to ask from my side, that nowadays people are saying that we have to see non-monetary information in financials also. Earlier we used to see only monetary figures, but right now so much disclosure has brought down by the different act or different sections. So we should consider that non-monetary information in financials also.
So you go on Project Share the Wisdom is the channel, YouTube channel of mine. Project Share the Wisdom. On that, 3-4 years back, I had given one video how to read overall annual report. You have to start reading the annual report right from the notice. Board of Directors report. Read carefully, management discussion. Everything is covered. They are all non-monetary things. Because only 3 pages are monetary. You know, balance sheet, profit and loss account, and cash flow, and that their schedules. But notes to the accounts, the Board of Directors report, the management discussions, the audit report, they are all non-monetary, but from there you get lot of information where this company is going. Contingent liabilities, cases, litigations, expansion plans, everything is there. Read that. We don't read because it all comes in the soft copy now. We just take out only the balance sheet, P&L and cash flow. I read whichever company, there may be some hard copies of the balance sheet lying here. It takes 2-3 days for me to read one balance sheet.
Yeah, Rajendra ji also saying that nowadays annual reports are huge, extended to over 200 pages.
Yeah.
Yeah. So, sir, thank you very much for enlightening us on this topic. And I am getting you are getting so much feedback. So all are very much all are saying thank you for your presentation. So, sir, but for formally give you vote of thanks, I want to invite CA Hemant Gandhi ji. Please, Hemant Gandhi ji.
Good afternoon, everybody. First of all, I am very thankful and grateful to WIRC for providing me an opportunity to propose a vote of thanks. Secondly, I am also on behalf of WIRC, we are very grateful to CA Dr. Ashok Ajmera for sparing his valuable time and sharing his wisdom and expert knowledge on capital market with our members. Due to recent Russia and Ukraine war, it has affected the globally and also has affected our industries also in India. I hope our members must have enriched with nice analysis on why there is ups and downs in capital market recently. On behalf of WIRC, I propose a hearty vote of thanks. Thank you very much, sir.
Thank you.
Thank you
very much.
Thank you all the participants, all the coordinators, WIRC for arranging this seminar. And I assure you that every month we will keep a session on capital market, and I will be continuously in touch with Ashok ji to guide us that which topic we should keep. And for refresher course also, we will keep in touch with Ashok ji. So all the best.
I would also
thank
like
you
to
all the
thank.
participants.
I would also like to put on my sincere thanks to my research head Akash Jain, who helped me in
Yeah.
preparing this presentation, and he was here showing on the screen
Yes, sir.
also. Akash is very
Akash ji,
shy,
thank
you
you.
know, he doesn't switch on his video, but he is a great instrumental to me in this presentation. Thank you, Akash.
Yeah, thank you, Akash, for your background support. Thank you, sir. Yeah.
Okay.
Okay.
Thank you very much.
Yeah.
Okay, can I leave now?
Yes, we all can leave. Misra ji. मिश्रा जी मीटिंग बंद कर दीजिए। ये लोग सो जाता है लगता है, बोल रही मीटिंग बंद करने के लिए कर ही नहीं रहा है, बता, और मैं बीच में निकल नहीं सकती। अभी भी सोच 47 लोग जुड़े हुए हैं, दैट मीन्स कि दे वर स्लीपिंग, है कि नहीं? मतलब मीटिंग खत्म होने के बाद भी यदि इतने लोग जुड़े हुए हैं, इसका मतलब वो सो रहे थे ना। हाँ, अभी उसको फोन मिला रही तो फोन भी नहीं उठा रहा। आज पड़ेगी उसको, देखना, मैं बोलती हूँ चेयरमैन को। क्या है पागलपन? लोग मेरे से पूछ रहे हैं, मैडम कैन वी लीव द मीटिंग? बता, कितना गंदा लगता है।
पिंकी मैडम बंद कर रहा हूँ।
अरे हाँ विनय जी, आपको इतनी देर से बोल रही हूँ बंद करने, करो बंद, लीव करो।